Welcome back to Click Capital, everybody, and what a day we've had here on Wall Street with Nvidia adding $250 billion in market cap just overnight on the back of their better than expected earnings and second quarter guidance. And if you've been long the stock or call options, I do congratulate you. In all my 20 years of trading, I've never seen a mega cap the size of Nvidia add on 30% overnight just because they increased their guidance, and their earnings on Q1 last year were actually down almost 20%. And here's a look at Nvidia on the daily chart. So we settled at 379.80. We're now at 938 billion market cap, did almost get up to $1 trillion overnight. And just looking at the 15-minute chart, here's when we had earnings yesterday come out. The stock ripped up and actually got up to 395 in the after hours market. Then we closed at 8 p.m. New York time at 380 and opened up in the pre-market session 4 a.m. at 372. We actually made it all the way up to 399.50 at 8:15 this morning. So not quite $400 a share, and then we sold off a little bit coming into the open. We opened at 385, actually sold off straight away down to 366. Bounced back up at 11:15, getting back to 394.80 before trickling down in the afternoon, and then we're just drifting down a little bit here in the post hours as I make this video. So we weren't able to take out those pre-market highs or even post-market highs today in the regular trading session. And this was on huge volume today, 154 million shares changing hands, and we did finish lower than what we opened. And of course, this is all over the media today with a lot of positive news stories, and I'm sure pulling in a lot of new investors at these highs. And we're seeing that all over the place with headlines like "Ride the Nvidia wave. Wall Street says the undeniably pricey stock can keep roaring." And this is a good one, how the AI explosion could save the market and maybe the economy as well. Here's another one from the media convincing you to get into the stock. Nvidia stock is cheaper today than it was yesterday. No, really. And of course, Wall Street analysts are scrambling to raise their price targets on Nvidia, with some now even saying $500 a share is next. And this is just classic moves from Wall Street, trying to pull your money in at the top, convincing you it can go higher. Analysts have the worst track record for making recommendations. And just looking at the monthly chart here, so we're up almost 266% over the last 7 months since we bottomed back in October. But now the media and Wall Street's telling you it's a good time to get in the stock. I'll let you make that decision. Me personally, I'm still short the stock. My most recent ad was in the post hours yesterday at 392. And I'm looking to get a decent retracement on this of about 50%. So I'm looking to get out around 250, but I'll play it by ear and keep watching what the market does. As well as I think this is really good short exposure in my portfolio. It's so full of hot air. If the market does crash, this is going to crash super hard. However, it's hard to say if it's already topped. No one can really say that. I'm just speculating here. Again, this is not financial advice. I'm just sharing with you my research, thoughts, and opinion on the stock. And this pattern here actually reminds me a lot of Tesla back in 2021. You can see we came up and made this first big top in early 21, and then we dipped back down and made a bigger second top in late 2021 before we came crashing down over 75% before we found support in the low 100s. And if you look at Nvidia, we could be doing this similar pattern where we made that first top, dip down, and we're coming up to make a second bigger top. However, again, that's just my speculation. This is just one of many positions I hold in a diversified portfolio. And this is a risky trade, so that's why it is just one position among many. And whoops, Cathie Wood, who claims to be the queen of innovation investing, actually dumped Nvidia in early January and missed out on the $500 billion in market cap it's added since then. And even though we had the NASDAQ up 2.5% today, ARK actually finished down 2.7%. So unfortunately, once again, ARK holders miss out on these big gains. Just looking at the heat map today, another bifurcated market with big gains in the semis. Nvidia helped pull others up like Broadcom, Micron, AMD, even Oracle and Adobe joined in on the party. Microsoft, Google also have a presence in AI, so they had a good day, but Amazon, Tesla, and Apple not so much. And the rest of the market had a bit of a pullback, especially healthcare, energy, and utilities. And the economy continues to do better than expected with some surprising economic data out today. To the upside, we got initial jobless claims coming in at 229,000, so we're expecting almost 250,000. And GDP growth rate as well coming in better than expected, 1.3%. So the economy is still growing a little bit. And on the back of that data, that pushed Fed Fund Futures probability that we get a hike now into positive territory, 52%. So the market's now saying we're more likely than not the Fed is going to hike again, and I think so as well. The economy's still strong, high inflation, double their target. We've got risk assets ripping to new highs. Nvidia adding $250 billion market cap overnight. No way Jay Powell wants to see things heat up again, and he is going to cool it off with a rate hike. I'm growing more confident of that. And in July as well, we now got a 1 in 4 chance they're going to hike again. So a complete flip in the bond market here with their expectations of the Fed. So only a couple of weeks ago, they were saying that the Fed is completely done. Now we're back on an upward trajectory, and looks like we haven't seen the top in rates yet. Fear and greed index only moved up 3 points today. I was expecting a bit more, but we're still in the middle of the greed zone at 63. And a really busy day in the options market. Almost 40 million contracts changing hands, 56% of them calls. And of course, number one coming in is Nvidia. Did 4.8 billion in notional value with 1.6 million contracts in calls and 1 million contracts in puts. So a lot of people appear to be loading into calls here or potentially selling them because the IV is huge. But now's the time to be really careful and cautious on this market with this debt ceiling. And now we've got one of the most important indicators I follow, the dark pool index, absolutely dived today, down to 43%. So dark pool buyers have been really pulling back here this last couple of days. And looks like they've used this gap up in tech to offload some long exposure. Same with corporate insiders, they're still offloading here as well. Yesterday we saw 179 sales to 106 purchases. And this is because we have a degrading macro backdrop. One of the top 3 credit rating agencies just warned America that its constant threats not to pay its bills could spark a downgrade. So they've got the US credit rating on watch here. And if the US does start missing its interest repayments soon, then it could well be downgraded, and that could cause even more chaos in financial markets. But the politicians know what's at stake, so they should get it done, with both sides still confirming that they will get a deal done. And in another interesting turn on this story I've been following on this channel, and that's with Hindenburg Research, the short seller, going after Carl Icahn here and his company. We've now got Bill Ackman jumping in on it. And for those of you who don't know, these two have been long-term enemies, dating back for years when Carl apparently ripped off Bill fees from his hedge fund, and then Bill went after Carl in court and won. And then Carl later got back at Bill when Bill was short Herbalife. Carl went long. Then they had a big public dispute on CNBC, and it's been going back and forth for years. They really hate each other. And now Bill's adding fuel to this fire in a huge tweet today, which he really piles on. And in my opinion, trying to make investors nervous and pull in regulators as well. He's tagging the Justice Department, he's tagging SEC, even saying Carl Icahn's company reminds him of Archaeos. That was the hedge fund a couple of years ago that blew up in spectacular fashion. And he's even saying things that all it takes is for one lender to break ranks and liquidate shares or attempt to hedge before the house comes falling down. Here, the patsy is the last lender to liquidate. And finally, to rub it in, he says Carl Icahn's favorite Wall Street saying is, if you want a friend, get a dog. Over his storied career, Icahn has made many enemies. I don't know that he has any real friends. He could use one here. And of course, Twitter is getting in on the fun with the memes. And just look at Carl Icahn's stock, down another 13% today. This thing's getting absolutely smoked, and what we're witnessing is the 50-year empire of a Wall Street legend just absolutely crumbling and right in front of our eyes. And we've been following this story ever since news first broke, and we were trading down in the 40s. Now we're down in the 20s. But it is on a hammer formation, and maybe a bit of dip buying here. So let's see if the stock can hold $20, because the further this goes down, the more pressure it puts on Icahn to have to liquidate his own shares and cut the dividend. Just gets more messy and messier, and lenders start worrying, key investors will start bailing, and it's kind of hard. It gets to a point where it gets so technically smashed, it's kind of hard to come back from. Okay, back to the charts. Quick check on Nvidia. We're currently trading at 378 in the post-market as I speak, just down a little bit. And a real mixed day out there in the market. So the SP 500 actually finished up almost 1% to 41.51. There's the NASDAQ breaking out to new highs for the year, up almost 2.5%. But if you look at the equal weight NASDAQ, it's pretty meager performance. And even the Dow, mid-caps and smalls all came off today. International stock indices didn't join in on the party. We've got the TSX, FTSE and DAX all coming off. And volatility cooling down a bit too with those big moves in tech. But there's bond market volatility creeping back up, 139 on the move index. And just a super low put-call ratio on equities, one of the lowest we've seen in quite a while, 0.71. So people once again just piling into the calls here. But it's just a real concentrated section of the market that's doing well, and we can see that in the breadth. We've only got 27% of stocks above their 20-day average, and only 37% of stocks above their 200-day long-term moving average, and that's moved down today. So breadth in this market continues to deteriorate. 28, most stocks are in a downward trajectory. Saw a little bump up and stocks making new highs today, but still really low overall at 25. And those big moves in the semi stocks today pushed up the growth versus defensive sectors. Took the equal weight S&P down to a new lows for the year versus the regular SP. And we can see that continued rotation into growth, high beta stocks versus low volatility defensive stocks, value stocks here. And here's the NASDAQ versus SPY, just continues in this parabolic move this year. So doesn't show any signs of stopping just yet. And international stocks continue to get hit hard versus American stocks, all coming down here today. Inflation expectations continue to creep back up. And look at that move in that 2-year, back up to 453 today. 10-year as well, back to strong climbing, reversing all this negative stuff from Silicon Valley Bank. And along with that, Fed Fund futures climbing up to December now over 5%. So the market has pretty much now got rid of all notion that the Fed is going to cut this year. And now the probabilities, we've got September higher than the June contract. So right now the market's saying there's a greater chance they're going to keep hiking. And even though we had a big move up in rates, TLT is still holding support here just above 100. And high yield bonds didn't get in on the party today, actually came off a little bit. There's the dollar continuing to trade strongly. And with that strong dollar, commodities had a hard time today, coming off a bit, but looking to find support here in this big zone. Gold continuing to trickle down. Crude had a bit of a pullback, but finding support around 72 a barrel. Got the IPO sector back below its 50 bar VWAP. And look at that move in the semiconductor ETF, up 8.6% today on huge volume. Same with bots, up 3% on big volume. Retail stocks continue to get hit hard, finding new lows for the year, and a bit of a more of a pullback in energy and oil and gas, along with gold miners. Financials just kind of hanging in there, along with industrials and transports. Defense stocks looking to come down and test year-to-date lows, and rotation continuing out of the healthcare, staples and utilities, but there were a bit of dip buying price action here today, so it looks like some money coming in there. Tesla got up a little bit here today. Another look at Nvidia, just still sitting at 378, so pretty flat here. Microsoft found new highs on volume with all the AI buzz. Amazon actually came off 1.5%. Google gapped up but couldn't find new highs. Meta found new highs. AMD had a great day as well, up 11%. Meme stocks were mixed, and Intel didn't like this action today, came off 5.5% on volume. So it wasn't not too long ago, a couple of years ago, they were the best in class leader. Seemed like they couldn't have their dominant spot overtaken. Nvidia was the really smaller player, and how quickly things changed, because now we've got Nvidia looking at almost 1 trillion market cap, and Intel's just over 100 billion in market cap, so almost a tenth of its size. And just shows you how extreme the market can get in a short period of time. And yes, while the fundamentals have definitely changed on Nvidia, having better chips and products than Intel, the market often overcompensates, especially when we see all those news stories in the media and Wall Street and analysts and everyone trying to hype you into the stock. And it's funny, we got the media and Wall Street trying to hype up the stock at these extremely elevated levels when, according to dark pool data, sophisticated traders actually have a short position in the stock. Also saw a really big move up in Marvel today, up 7.5%, then just reported earnings after hours as I speak. They only beat by 5.8%, but the market's loving it, up 18% in post hours. We had RH report as well, a bit better than expected numbers, but the market came off a little bit. And contrasting other retail stores, we had Gap report, a bit better than expected, and the market's making up for that, up 14.5%, but I wouldn't look too much into that because it was only a few weeks ago we're trading at $10 a share, and at $7.40 at the close, it's just closing that gap. Best Buy as well reported a little bit better than expected, and the market moved it up about 3%, but that's still from a really oversold position. We had American Eagle Outfitters report yesterday, and the market marked them down 12% today, but there was a bit of a dip by there. And overvalued stock, in my opinion, Snowflake came off 16% today after their earnings. And this business, like many others, just becoming a commodity. They just house data in the cloud, so you could just think of them as like a warehouse for digital data, and they have a lot of competition, and it's becoming a commodity. It's not a real strong consumer brand name or anything like that. Foot Locker continues to get marked down, along with Target as well, and really been hit hard here into really oversold territory ever since they decided to try and start selling controversial clothing to kids. And the regionals came off a little bit here today, except for Charles Schwab, which actually had a good day, up 4%. And this had been a stock the market had been worried about, as there's a lot of fear, uncertainty and doubt, but they appear to have been holding on here. Okay, so for my final outlook on the market, we've now got a big 400-point gap between the SP500 and the global net liquidity model, and that just shows that central banks are continuing to taper their purchases and reduce liquidity in the market, which acts as a strong gravitational pull on asset prices. And overall, if you look at the S&P 500 equal weight, that actually came off today. And we've still got others like the Dow and mid caps and smalls below their 50-day averages. So most of the market is still trading weak here, of course, except for mega cap tech and the whole AI thing. And with the dark pool buyers bailing on this market, corporate insiders selling, we've still got all those divergences with breadth and junk bonds. I've used this gap up today to tilt the portfolio 40% net short again. And of course, you've got to be really selective in this market. You don't want to be shorting too much mega cap tech stock. Apart from Nvidia, I'm not shorting any of the other big names as they are in strong parabolic uptrends. Who knows how high they can go. But overall, most of the market is weaker. And who knows how nervous the market could get going into this debt ceiling deadline. I still think there's a lot of risk out there in the market. And here makes a little bit of a good spot, in my opinion, for a risk reward on getting short. And as bit of a contrarian play to the market with all those call option buyers out there and not many people buying puts. So there's not a whole lot of hedging going on in the market, which should add fuel to the downside if we do get it. So that's all for today. Thanks very much for watching. Let me know in the comments what you think of Nvidia after today. And if you found value in this video, I'd appreciate if you hit the like button and hit that subscribe as well if you want to get these videos sent to you every day. And I'll keep you updated on all the most important events, data, and charts in the market so we can all make better decisions. All right, guys, see you again tomorrow for the last day of the week.